Hello everyone, welcome back to the Rocky channel. In this video, we will talk about the pullback trading method, meaning finding a good entry point when the price pulls back. You may have heard of pullback before, or maybe you are a beginner and have never heard of it. Don't worry, because in this video I will try to turn difficult things into easy to understand things, so that even a beginner can easily grasp and apply it. Especially, it still has to be simple and effective. Don't forget to hit the like button and leave a comment about the topic you want me to do related to trading and investing. I will choose the most useful topics to bring to everyone. We will start right now. First, let's look back at what the concept of the pullback trading method is. If breakout trading means we enter an order when the price breaks a resistance zone. For example, here, we have a price zone pushing up, creating resistance zones, and we will enter an order when the price breaks this resistance zone. We enter a buy order here. Stop loss below the nearest bottom zone. You can review the breakout trading method that I made before. Then in pullback trading, it means we will enter an order when the price pulls back to a certain resistance zone. For example, we will enter a buy order when the price pulls back to a resistance zone in the previous uptrend. The price pulls back to the support zone of the buyers. Considering the bull and bear theory, and in the case of a buy order, if the market is rising and we have a support zone of the buyers, it could be a broken peak zone or a bottom zone. I will talk in detail about these cases later. Then, when the price pulls back to the support zone of these buyers, it means the sellers are attacking back against the upward force of the buyers before. And when the sellers reach the buyer's base, we see signs of the buyers entering the market, and it resists the downward force of these sellers. Then that is exactly the time when we enter a buy order, with the purpose that the buyers will attack back and the price will continue to rise for us to take profit. But if after the sign appears that the price rises, but the price doesn't rise much, then it breaks down the bottom zone of this sign. Then the high probability is that the price will continue to fall. Therefore, below this sign zone, we must place a stop loss point. These are the basic elements of pullback trading. However, what types of pullbacks are there, and what kind of pullback is beautiful and not beautiful? We will look closer right now. Still considering the case of a buy order, for a sell order we will do the opposite. As just now we have the main elements, which are, first, an upward force or a previous uptrend. Next is the resistance zone of the buyers, also known as the base zone of the buyers. And finally, a sign or signal at the buyer's base zone, showing the buyers successfully defended this base zone. We need to note that in pullback trading, the market must have a clear trend. In the case of buying, the previous trend must be up and clearly dominant. Not in a sideways market, where the price pulls back to a resistance zone and then creates a signal. Then at this time, we no longer call it a pullback, and its effectiveness will not be good either. Unless this sideways zone is located within a clear previous trend zone, then we consider it. So from these three elements, we will have the following variants. First is in an uptrend. Having an upward structure, the price breaks through the old peak zone. This is a base zone of the sellers that push the price down. Then the buyers attack back, raking through the seller's base. Then at this time, the seller's base zone is taken over by the buyers and becomes the buyer's base zone. Continuing, the price pulls back to this base zone and creates a sign of the buyers attacking back. In the second variant, it's in an uptrend, having an upward structure. The price breaks the peak and goes up, but this time it pulls back to the bottom zone, the previous buyer's base zone, then creates a sign of the buyers entering the market. As for the third variant, we have an upward force, but the price hasn't broken through the old peak zone yet, and pulls back to the previous buyer's base zone, then creates a sign of the buyers entering the market. In the case of selling, we also have these variants but in reverse. There, from these three variants, and considering three elements, we will see which variant is better than which variant. If considering the same uptrend and the same entry signal, we will see that in the second variant, it will show the strongest buyer's force at the buyer's base zone. In the third variant, clearly we see that the buyer's base zone is the weakest, because from this base zone, the price hasn't broken the peak zone and has been pushed down and reversed by the sellers. The base zone that the buyers took from the sellers in variant 1 is also not as strong as the base zone, which is the root of the wave breaking through the previous peak zone, like in variant 2. Because we can also combine Dow theory to see that when the price breaks through the bottom zone that created the highest peak, then at that time the downward force is shown more clearly and the reversal probability is higher. Therefore, the bottom zone that creates the highest peak plays a very important role. Furthermore, after the entry signal appears, the stop loss point in variant 1 is also not equal to the stop loss point of variant 2. When placing the stop loss in variant 1, we see that the stop loss point is only below the entry signal. But when placing the stop loss in variant 2, the stop loss point will be both below the entry signal and below the previous bottom zone, meaning that if the price breaks down the signal zone and hits the stop loss point, the higher probability is that the price will fall. But in variant 1, sometimes it breaks through the stop loss point and goes down to this bottom zone, it gets pushed up again. From analyzing the buying force and selling force, we will see in which variant it will increase the winning rate higher. And that's the end of part 1 on pullback trading. In the next part, I'll go deeper into how I identify strong pullback zones, confirmation signals, and real trade entries on the chart. I also regularly share market insights and setups inside the trading room, so feel free to follow along and stay connected. See you in the next part.